Here in South Korea, news of the U.S. Federal Reserve's latest rate decision is being met with caution by authorities here as they pledge a proactive stance to protect national interests. Our Ju-yeon explains.
The government is stepping up risk monitoring after the U.S. Federal Reserve signaled further policy tightening. At a meeting of top economic and financial policymakers on Thursday, chaired by Deputy Prime Minister and Minister of Finance and Economy Yun-cheol, officials present promise to strengthen an integrated risk management framework and take preemptive measures when necessary.
As expectations of interest rate hikes in major economies and global uncertainties, including the outlook for the AI-driven economy, continue to persist, we will maintain heightened vigilance, closely monitor market conditions, and take timely stabilization measures when necessary.
Meanwhile, Bank of Korea Senior Deputy Governor Yoo Sang-dae shared a similar view at a market conditions review meeting, urging caution over potential volatility in financial and foreign exchange markets amid persistent global uncertainties. He said a shift in the monetary policy stance of major economies is becoming increasingly apparent as central banks continue to prioritize inflation risk. Central banks worldwide are shifting toward tighter monetary policy as inflation pressure persists. The European Central Bank has raised its key interest rate to 2.25% as inflation remains above target, partly driven by continued geopolitical risk from the war in Iran. The Bank of Japan also tightened policy, lifting its benchmark rate to 1%, the highest level since 1995.
The reason why central banks are increasing the rates globally is because of the high pressure of inflation coming from the oil crisis caused by the Iran war.
Earlier on Wednesday, the U.S. Federal Reserve left its benchmark interest rate unchanged at a range of 3.5% to 3.75%, marking its fourth consecutive meeting without a rate move and the first policy decision under new chair Kevin Walsh. The Federal Reserve's latest signal has also heightened focus on the Bank of Korea's next policy move. Bank of Korea Governor Shin said on Wednesday that consumer inflation is expected to remain elevated for a considerable period, despite the recent decline in global oil prices. He also emphasized that the central bank will respond decisively until it is confident that inflation is on a sustainable path toward its target. Ju-yeon, Arirang News.